There's been a lot of conversation recently of people essentially drawing the comparison of Bitcoin to gold, essentially as a store of value more than really as like a digital currency. So I want to kind of talk about that a little bit and break that down of like Bitcoin versus gold, which is the better investment, which might be the best investment for you, given your place in life, your future, all that type of stuff. Again, please remember that none of this is financial advice. This is just kind of a quick analysis done by me, kind of assessing the key comparisons or differences between Bitcoin and gold, how they could affect you and your future, and what could be the most lucrative option for you depending on kind of what your goals and your aims are in your investing journey. So anyway, just want to kind of give that quick disclaimer before we jump in. But what I've done is I've put together a kind of a pretty decent quick review of Bitcoin versus gold, going over some qualitative differences as well as some quantitative differences, and trying to break down how they're similar, how they're different, which is better, which one, if I had to choose one, which one I would be choosing, a lot of that type of stuff. So anyway, we'll go on ahead, we'll dive right in with that. And I'm going to actually turn my camera off just so you can see the full slide and make sure that my face isn't getting in the way of any information. So as we can see here, Bitcoin versus gold, which is the better investment. Essentially what we're doing here is we're doing a comparative analysis of each of these as an inflation hedge, scarcity, and then obviously long-term returns as well. So moving along, what we can see here is we've got some key properties that I wanted to compare just to give you a better sense of the difference between the two. All right. So of course with gold, I'm sure basically all of you have a very, very detailed understanding of gold and understand kind of what it, why it works, what it is, how it works, all that type of stuff. Bitcoin, you may not be as familiar with. And so I want to talk a little bit about that as well. What we can see here is gold obviously is a physical metal. You can see it, touch it, feel all that type of stuff. But with Bitcoin, it's digital code. And so digital code, obviously, I think that's kind of the first hill that a lot of people have to get over with Bitcoin is you can't really see it. It's just kind of this thing that's there and you have to trust that it's there because it's on the computer somewhere, but you can't see it and feel it like a bar of gold or a gold coin or anything like that. Now, obviously with the age, gold's been around forever, 5,000 plus years, probably even longer. But it's kind of been, it is the gold standard, right? Pun intended there. But that is what people view as kind of the key way to store wealth. It's the key, essentially that is the gold standard of storing your wealth over time. Bitcoin, however, has only been around since 2009. It's very, very young. Since then, it's obviously seen massive success, and it's finally starting to, I think, be viewed by a more institutional and governmental level as actually being a store of value. Since then, it was kind of it's scammy. Oh, it's, this is what terrorists use, all this type of stuff. But now I think people are finally starting to come around to, oh yeah, this is actually a real hedge against inflation. It's a store of value, all that type of good stuff. What you can see here is for gold, the supply is about 200,000 tons and increasing, of course. Obviously people are mining gold all of the time. Potentially when we get to, asteroid mining, obviously this is not going to happen tomorrow or probably within even the next 5 years or so. But I think it's conceivable 20, 50, 80, 100 years out, depending on kind of how things progress over time. That is a conceivable possibility that we could be continuing to draw more gold even from the stars. So, and then obviously with Bitcoin, there's 21 million ever maximum. It emits out until 2140. After that, all of the Bitcoin that will ever be in existence will be in existence. Even right now, about 85% of it is currently circulating. What we can see here for divisibility, obviously with gold, it is possible, but it is quite difficult to do without having a whole complex process there. With Bitcoin, it's actually very, very easy. There's one Satoshi is essentially 1/100 millionth of a Bitcoin. So there's 100 million Satoshis in one Bitcoin. It's highly divisible. Obviously right now, one Satoshi is not worth much, but as the price of Bitcoin continues to inflate, that will become kind of more and more of a meaningful metric over time. Now, portability, of course, Bitcoin, it's code, right? So it's instant and borderless, where with gold, obviously it's heavy, it's hard to transport. It's obviously super valuable. So you have to store it in a place that's and you have to store a lot of it, right? Think Fort Knox. I mean, Fort Knox is an entire fort built to protect the U.S.'s gold supply. So, that's kind of one way or some couple key comparisons there. And then I also want to compare key properties between both Bitcoin and gold and give them a star rating. Again, this is all my opinion. You may agree, you may disagree, but this is just kind of how I'm looking at it. So what we can see from scarcity, obviously both are limited. Gold is scarce, but Bitcoin has a finite cap. Gold technically has an infinite cap. It's just very hard to get and incredibly expensive to get, which is why it kind of keeps that like scarcity and store of value up. Because even though you can get more, it's very expensive to get more. So I'm going to give Bitcoin the slight edge on this one just because there's literally, you cannot have more than 21 million Bitcoin ever, no exceptions. Where gold, even though it's very expensive, you can actually get more. Now with durability, I am going to give gold the kind of the edge here because while technically both have the ability to last forever, gold's been the store of value standard for 5,000 plus years. Bitcoin has only been around very recently. I think as we transition into the digital age, people will place more and more priority and value on things like Bitcoin just because people are accepting computers more generally. Computers really have only existed for about 50 years, right? So even just kind of the adoption curve of computers and technology generally is still kind of in its early stages. And so that is why I do give gold the edge here, just because purely of history. While Bitcoin obviously is kind of infinite and persistent, at least from what we've seen so far, it just doesn't have the track record that gold does. Now, verifiability, this is one, that I think may be a little bit of a controversial statement, but I think with this, Bitcoin to me is the clear winner, right? If somebody says they have a Bitcoin, it's very, very easy to prove that out. It's really not like much of an issue at all to prove that out. Gold is a little bit more of a process to do that, right? Because you need to physically test it, right? Like, is this gold or is this like a spray painted brick with gold paint, right? Or is this like actually pure gold, or is this gold plated? Even if it is real gold on the surface, is it all the way real gold? Has this gold been diluted with some other alloy? Think about like 24 karat versus like 10 karat gold. 24 karat is of course going to be more pure gold than something like 10 karat. So, it's a lot more complicated to do, and it takes a lot more expertise and resources and things like that to do that. Where something like Bitcoin, very, very simple. You either have it or you don't. It's easy to seek because it's on a public ledger. Now, ease of use, this one I want to kind of give a little bit of a caveat to, because some of you who may not be familiar with Bitcoin, you might be thinking like, how easy is it to go buy Bitcoin versus buy gold, right? Gold, obviously you can go to your nearest pawn shop and get gold. Very, very easy. Bitcoin still, again, we haven't really seen that adoption curve quite hit yet. And so that's why I kind of, even though I don't really consider like the ease of use, meaning like user accessibility, user experience, user interaction. I'm talking ease of use in terms of like, I already have both, which is easier for me to use. So let's not get this confused with like ease of use versus ease of acquisition. I am currently kind of comparing them a little bit different there. Here I am going to give Bitcoin the edge again for the same exact reason. Gold is heavy and it's hard to divide precisely. Bitcoin is easily transferable and divisible up to 8 decimal places, i.e. 1 Satoshi. So think about it. If I gave you 1 Bitcoin and 1 bar of gold, which is easier to use? 1 Bitcoin is going to be far easier to use than 1 block of gold, because if you want to go buy a pizza with your Bitcoin, you can go pay somebody 20,000 Satoshis or whatever it costs to buy your pizza. Where if you have a block of gold, like, what do you do with that? Like, do you just carry around like a razor blade and just like shave off gold shavings? But with gold, do you keep like a high precision scale and like a razor blade and just kind of like shave off pieces of your gold bar until it's like enough to meet the like online trading value of gold? Like, obviously that, that's very, very difficult. So I think Bitcoin has the very clear edge here with like the ease of usage. Now, moving along, I want to take a look at the investment performance as well. So on the left side here, you can see this is gold price. On the right side, you can see Bitcoin price. If you kind of, again, this is obviously right size, like this is a 3x and this is like 1,000x, right? So they're not at all comparable in terms of magnitude, but what we can see is they move fairly similarly. When Bitcoin goes up, gold goes up. When Bitcoin goes down, gold goes down, because they are kind of both operating as stores of value and hedges against inflation. So realistically, what we're seeing here is if the price is going up, inflation or the money supply is also going up. So people are using these as places to kind of store their value, while money is essentially getting inflated away to zero. So what we can see here is this is a 10-year price chart comparison. Gold has been up about 50% in that period of time. Bitcoin's been up about 10,000%. So obviously very, very different numbers over the past 10 years. But we also have kind of been in a period where Bitcoin has been kind of finding its like key adoption and its key use cases. So that's why I don't want to get that too confused here. I want to look kind of forward into the next 10 years and think about what is the best thing to hold in the next 10 years. And that's what we're going to kind of be focusing along here. The key points of contrast. This is very, very important to understand here. When you're storing gold, obviously it needs to be in like physical vaults. It's very high security, a lot of that type of stuff. Bitcoin, you're storing in digital wallets. Again, you still have to have a ton of security around that wallet, but it's just not going to be as like bulky, right? I mean, if you have 200 tons of gold versus 200 Bitcoin, it's like storing 1 Bitcoin and 200 Bitcoin is basically the same. Storing 1 gold bar and 1,000 gold bars is very, very different. With transactions, you can see Bitcoin's 24/7, and it's also a global network. It's permissionless as well. So you can basically send however much to whoever you want, whenever you want. Where with gold, it's a physical transfer. You know, if I want to send a bar of gold to somebody to pay for a house or something like that, how do you do that, right? I mean, you can't just like go FedEx a gold bar to somebody. So it's a lot more difficult to do that, where you could just go send a Bitcoin to somebody whenever you wanted. Where transactions, obviously Bitcoin is easily divisible, where gold, it can be very difficult for small amounts. Go back, please refer back to the pizza example that we talked about just a couple of minutes ago. Now, for the risk assessment, this is going to be where we see kind of a key difference, I think, toward gold and probably in the favor of gold and away from Bitcoin. I am thinking that this is going to be changing over the next 10 years. I think we probably still need to see another 5, maybe even 10 years or so before we really kind of see Bitcoin and gold be comparable on this level. But what we can see from gold, obviously the key issue here is theft. I think this is also for Bitcoin as well, just because if you get your seed phrase hacked or whatever, you're going to lose your Bitcoin too. But also the storage costs for gold. The storage cost is going to be a lot more numerous for gold because, again, storing 1 Bitcoin versus 1,000 Bitcoin is the same. Storing 1 bar of gold versus 1,000 bars of gold, very much not the same. And then also you can see counterfeiting can be a very big problem with gold. As I was saying, you can melt it down, dilute it, try and fraud it altogether or fake it, all that type of stuff. Where with Bitcoin, you can't really do that, right? Because it's a public distributed ledger, you can't really fake that overall. However, with Bitcoin, it has its own risks. Regulatory uncertainty, obviously in the past has been a huge one. This is not one that I think is going to be as big of a risk going into the future. Again, we never know what the future holds, but I think this is likely past us. I would obviously add theft here as well. You can get your Bitcoin stolen, but again, you have to exercise safety practices when storing your Bitcoin. The technical complexity here, obviously the technical complexity for crypto and blockchain, Bitcoin, all that stuff generally is very, very high. And so that is something that I think is going to be a little bit of a barrier to entry for a lot of people, is they need to first understand what it even is for them to become comfortable with it, right? So that is something that I do think will take time. People know gold because gold has essentially been just like ingrained into our like worldview forever, right? The past 5,000 plus years. Bitcoin is still very, very new in that respect. The main risk, I think, especially in terms of a store of value, is the volatility. When we're looking at gold versus Bitcoin in terms of which is the better store of value, this to me is really like the number one point of contrast between Bitcoin and gold. Bitcoin, I think, can be a store of value. I think obviously gold is, but the main thing holding Bitcoin back from being a store of value is the volatility. This is a massively important thing when you're talking about institutions getting involved, right? Because if Bitcoin can drop 50%, like, yes, gold can too, but it really doesn't, because it's a lot more mature of an asset. And so, but if something can drop 50%, people are going to be a little bit more wary about going in super hard on something. So something to think about. And here we actually have a volatility analysis where you can see exactly that. The orange lines are the Bitcoin's monthly percent change, and the yellow line is gold's monthly percent change. As you can see, Bitcoin orders of magnitude greater in terms of monthly volatility. I don't think this I don't think this is much of a surprise to anybody. Bitcoin, of course, is very, very volatile. We're seeing obviously that the peaks are getting kind of lower over time. And I think this will continue to go, kind of as Bitcoin matures, as the asset class gets larger, a lot of that type of stuff. I think this will continue. But at least for right now, things are, it's a very, very clear winner that gold is a far less volatile asset. Now, of course, the investment case, why gold? Of course, it's the established history. That to me is probably the key thing here. Low volatility, of course, is kind of part of that established history. And then the physical backing. If you want something that you can see, touch, feel, all that type of stuff, obviously gold's going to be your thing, right? Where with Bitcoin, it's digital, it's innovative, it's got potential, it's got massive growth case, and it's programmable. So, I think as we move into this possibility of like this future case where we see a lot more digital adoption, everything's going to be done more online. We've even seen over the past 20 years, there's just a lot more happening online. People are far more comfortable with computers than they were even, say, 20 years ago. Obviously, we've got our phones in our pockets, all this type of stuff. If you kind of are expecting the world to kind of lean further into that, Bitcoin's going to be exactly what, kind of at the center of all of that, if you ask me. Now, for the portfolio consideration, obviously you should have complementary rather than competitive assets for a lot of these things. I think there's a world in which you could have both gold and Bitcoin. Kind of keep both. Have some of that upside exposure from Bitcoin, but then also have some of that stability, the history, the physical backing, a lot of that type of stuff for gold. I think that's totally reasonable. And then obviously, this you'll need to have it's part of a well-balanced portfolio. Have some real estate, have some stocks, have some, just cash, all that type of stuff. Now, here are the key takeaways. So obviously, the unique advantages of Bitcoin are programmability and the utility. The fixed supply, I think over time, this is going to be far more important than probably anything else on Bitcoin's side. Of course, the high growth potential, of crypto is very, very new. Bitcoin is kind of the banner carrier of Bitcoin. So of crypto, excuse me. So as crypto continues to grow, Bitcoin will be the one that kind of leads that way. And then it's also digital, it's borderless, it's instant, it's very easy, it's very convenient, a lot of that type of stuff. The unique advantages of gold, though, however, it's the stability, right? I mean, it's far less volatile. It's got the proven track record. It's got the regulatory clarity, and it's a physical asset for the people who really just have, they have to kind of see it, touch it, feel it to understand the store of value. Gold can do all of that, and Bitcoin really can't, at least yet, right? Obviously, with Bitcoin, as it gets a little bit more adoption and some usage, and it just gets a little bit more history behind it, I think some of these walls will start to come down. But that currently kind of remains to be some of the major issues. Obviously, the overlapping qualities between them both. Both are great hedges against inflation. We kind of saw that with the previous charts. They're wonderful alternatives to fiat because fiat, again, kind of gets printed into infinity. They're a store of value, and they're also very scarce. This is kind of exactly what you want out of a store of value. So now moving on, which is better, right? I mean, obviously we've kind of been through some of the details between both of them, but which is better? And I guess the cop-out answer here is you need to decide what's better for you. If you really like that lack of volatility, let's say you're getting very close to retirement age, maybe that volatility is not something that you can afford to deal with because you need that certainty month to month to month. Bitcoin is not going to give you that certainty month to month to month. So that's a very, very important thing to consider. Now, I'm going to take this from my perspective. What I would do, given that I am fairly young, I've got a long kind of road ahead of me before I'm looking at retirement. I can afford to take massive risks. I can afford to lose a lot of money because over time, especially if some of these things are going to pay off a little bit better because of the risk, that is essentially kind of what I'm looking for, right? So for me, if I had to choose between gold and Bitcoin, of course, for me, it's not really even much of a discussion. I think Bitcoin has a very, very long road ahead of it. It's easier to store. It's easier to transfer. It's still in very, very early, the very early stages of institutional adoption. It's got a really, really strong road ahead of it, in my opinion, and the upside is absolutely huge. I think the 21 million Bitcoin, you look 20, 30 years down the road after we've seen 5, 6, 7 more halvings, and we start to see that, oh, well, Bitcoin is actually like not really being minted into circulation, because now at that point, maybe it's like 0.05 or 0.25 or 0.1 or all that type of stuff. Like every block that gets minted, the amount of Bitcoin actually being introduced into the system is very, very low. And so in terms of like new admission into the Bitcoin ecosystem, it's just not there. So in order for you to get Bitcoin, you have to buy it off of somebody else. And that to me, I think is going to be the key point. Where gold, it's like, yeah, gold will always continually be minted into the system. Yes, it is expensive, of course, but it's still going to be introduced. Particularly if we start doing like asteroid mining and all this type of stuff, we could see a massive influx of gold into the ecosystem just because it's now easier to obtain. There's more of it around, all of that type of stuff. Again, it's still going to be expensive, but it doesn't matter how expensive it gets for Bitcoin. You just cannot introduce anymore. So that's why for me, I am taking Bitcoin every time here. However, though, gold does remain a great store of value. I'm not saying that gold is bad. I just think that Bitcoin, at least currently, has the bigger upside here. Now, of course, the future may favor a mix of both traditional and digital stores of value, because essentially allocating to both can kind of help you with the volatility while keeping you exposed to some of that upside. Now, again, this is completely up to you, and this is your own decision in terms of your individual risk tolerance. If you can handle some more of those ups and downs and a lot of that type of stuff, then maybe it's worth it for you to kind of go a little bit heavier into Bitcoin. If you really can't deal with that uncertainty and you need to have that kind of that monthly stability there, going the gold route is probably a little bit better for you, though you could increase your Bitcoin exposure, maybe 2, 5, 1, 2, 3, 4, 5%, maybe even up to 10%, depending on what you're interested in. And then you can still benefit some of the upside while having the vast majority of your portfolio very much focused in less volatile assets. So that's kind of my overall comparison of Bitcoin versus gold. I think both obviously are great assets, but this is hopefully a pretty nice compare and contrast as to the values of each, which might be better than the others, and also, which might be the best for you. Of course, I've already mentioned that Bitcoin, in my opinion, is the best suit for me, but that's not to say that it's the best suit for you. Hopefully, this kind of gave you a comprehensive breakdown of kind of the key differences. And if you are looking to get into something that's a store of value, which might be the best option for you. So anyway, like I said, hopefully it was helpful. If it was, a like and a subscribe really, really do help me out. It's very, very valuable to me to kind of help continue to grow my channel and get pushed further on into the YouTube algorithm, all that type of fun stuff. Also, I'd love to hear your thoughts. Please leave me please leave me a comment in the comment section below. I do really like to hear what your guys' thoughts are. Was it helpful? Was it not helpful? Which are you going with? Are you going with gold? Are you going with Bitcoin? Are you going with a mix? If so, what's your mix? All that type of stuff. So anyway, hopefully, like I said, you found the information useful. And thank you guys for tuning in, and we'll see you in the next one.